Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of corporate filings, and today we're looking at Bonk Incorporated. Get ready for a shocker because this filing is all about a behind-the-scenes change that could drastically alter how you see the company's stock. Now, if you're looking for a juicy earnings report full of record profits or devastating losses, you might be a little disappointed with this specific document. But what we do have here is something that impacts every single shareholder's wallet, and it is a move that many companies make when they're trying to adjust their public image or meet certain stock market requirements. Before we dive in, if you find value in breaking down complex corporate documents into simple, actionable insights, make sure you are subscribed. We also have a growing Discord community where we discuss these filings more, and you can find the link in the description below. This is Bonk Incorporated, and they've just filed a Form 8K. Now, an 8K is like a current events report for a company detailing major events that shareholders should know about right away. The key event here is an amendment to their foundational document, their Certificate of Incorporation. Think of this as changing the company's basic operating rules. What did they change? They executed a reverse stock split, and not just a small one, a massive one, for -35 split. This means for every 35 shares of Bonk Incorporated stock you owned, you now own just one. So if you had 350 shares, you now have 10. And this had a huge impact on the number of shares out there. They went from over 184 million shares down to just over 5 million. That is a gigantic reduction. Now, if this split resulted in you owning a fraction of a share, like half a share, they're not going to give you that. Instead, they're paying you cash for that tiny fraction, so you basically get cashed out for any leftover bits. This change was effective on the 11th of December 2025, and the stock started trading on this new adjusted basis on the Nasdaq Capital Market on that same day. Your trading symbol BNKK stays the same, but the price you see will reflect this new share count. So, if the stock was trading at, say, $1 before, after the one for -35 split, it would theoretically be trading at $35. The total value of your investment should remain the same, but you now own fewer shares at a higher per share price. It is also worth noting that Bonk has declared itself an emerging growth company. This means they qualify for certain regulatory accommodations as a younger company, which can sometimes mean less stringent reporting requirements initially. This filing falls under the section about amendments to their core governing documents. It is not a change in their fiscal year, but a fundamental change to their stock structure. And as usual, they've included the exhibit that details this change. Specifically Exhibit 3.1, the Certificate of Amendment. They also included this interactive data file, which is a standardized way for companies to report financial information digitally. This report was signed on the 12th of December 2025, but the actual stock split event happened a day earlier. The report is signed by Jarrett Boone, who is identified as the Chief Executive Officer of Bonk Incorporated. Now, let's talk about why a company does a reverse stock split. Most often, it is to increase the stock price. A low stock price can make a company look less appealing to investors. And it can even lead to a company being delisted from major stock exchanges, like the Nasdaq. If a stock price falls too low, regulators might say it is no longer suitable for trading on their platform. So, by doing this one, for -35 split, Bonk is artificially boosting its share price to stay in compliance with Nasdaq's minimum price requirements. Think of it like this: if you have a pizza cut into 100 tiny slices, it looks like a lot of pizza, but each slice is small. If you then recut that same pizza into just 10 larger slices, you still have the same amount of pizza, but it looks like you have fewer pieces, and each piece is more substantial. However, this move doesn't magically make the company more profitable or change its underlying business value. It is a cosmetic change. The total market capitalization, which is the total value of all the company's stock, essentially stays the same right after the split. What can change is investor perception. A higher stock price might attract institutional investors who have rules about minimum stock prices they can invest in, but it also comes with a risk. Sometimes a reverse stock split is a sign that a company is struggling and is trying to artificially inflate its stock price to avoid delisting. Investors can be wary of this. And if the company doesn't improve its actual business performance, the stock price might start to fall again, even after the split. Looking at Bonk Incorporated, this move suggests they were facing pressure to maintain a minimum stock price on Nasdaq, without seeing their detailed financial performance from another filing like a 10Q or 10K. It is hard to say if this is a proactive move to support growth or a reactive measure to avoid a bigger problem. Historically, many companies that do reverse splits without underlying business improvements tend to see their stock price decline in the long run. So the big takeaway here is that Bonk Incorporated has significantly reduced its number of outstanding shares through a reverse stock split. This is primarily to boost its per share price and remain listed on the Nasdaq. While it might make the stock look more attractive to some, it doesn't change the company's fundamental value or profitability. Investors should be watching closely to see if Bonk Incorporated can back up this structural change with real business growth and improved financial performance. Alright, that is our breakdown of Bonk Incorporated's latest filing. What is your take on this reverse stock split? Do you think it is a smart move or a sign of trouble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord community in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.